Hi, this is the second part of the Chapter 9 Input VAT, but in here we will only discuss the special rules on input tax credit. So in here we will discuss the rules on non-depreciable vehicles, the rules on construction in progress, the rules on purchase of real property, and also the rules on purchase of goods or properties deemed sold. First, let me discuss you first the input VAT on non-depreciable vehicles. There are certain rules in deductibility of depreciation expense on vehicles. First is, only one vehicle for land transport is allowed for the use of an official or employee, the value of which should not exceed the 2,400,000 pesos threshold. B. The no depreciation shall be allowed to yachts, helicopters, airplanes, and/or aircrafts, and land vehicles which exceed the threshold, unless the taxpayer's main line of business is transport operation or lease of transport equipment, and the vehicles are used in the said operations. Third is the purchase must be substantiated with sufficient evidence, such as official receipts or other adequate records. And last is direct connection of relation of the vehicles to the development, operation, and or conduct of the trade or business profession of the taxpayers must be also substantiated. The second is the input VAT on construction in progress. What is construction in progress? It is the cost of uncompleted construction work of an asset. This is the accumulated progress billing of the contractor for the extent of completion of an asset under construction activity. The construction in progress account is classified to an up-to-date asset account. We have here an example. In January 2020, Tandag Corporation hired the services of Aliling Construction to build small sales building at an 11,200,000 pesos fixed price contract price inclusive of VAT. The construction was subject to 10% retention, which would be released upon completion. So the following quarterly data in 2020 relates to the project. The quarterly billing the first quarter is 2,240,000 pesos. The payment is only 2,016,000 pesos. The second quarter, the quarterly billing is the 4,480,000 pesos, and the payments is only 4,032,000 pesos, and so on for the third and the fourth quarter, which has total of 10 million pesos. Sorry. Thus, we will not get the tax or on the quarterly billing. Hence, the input tax is creditable upon payment of each progress billing of the contractor and is neither credited upon completion of the construction activity nor amortized over a period not more than exceeding 60 months. So in here, we will only get the payments or tax on the payments of the first up to the fourth quarter. So the payments in the first quarter is 2,016,000 pesos. It is multiplied by 12 for the 12% and divided by 112. Sorry, this is not a 12%, but it's 12 because it is considered as the 12% of the tax, and 112 because of 100% plus 12%. That's why the claimable input VAT for the first quarter will be 216,000 pesos only, and the second quarter is 432,000 pesos, and so for the third and the fourth quarter. I hope you clear on that. And the third is the input VAT on purchase of real property on installment. If the seller of real property is subject to VAT on the sale on deferred payment basis, not on installment plan, the input VAT shall be claimable by the buyer at the time of the execution of the instrument of sale, subject to the amortization rule on depreciable properties. But, however, if the purchase is by installment and the seller is allowed to bill the output VAT installment, the buyer can also claim the input VAT in the same period as the seller recognizes the output VAT. This is under the Section 3 of RR 4 of 2007. Fourth is the input VAT on purchase of real property installment. The claimable input VAT on goods or properties previously deemed sold shall be the portion of the output VAT imposed upon the goods deemed sold which corresponds to the good purchased by the buyer. Illustration: Mr. A had 1,000 pieces of merchandise which were previously deemed sold at the value of 20,000 pesos with an output VAT of 2,400 pesos upon Mr. A's retirement from business. So subsequently, Mr. B bought 500 pieces of the 1,000 pieces of the merchandise deemed sold from Mr. A for 12,000 pesos, inclusive of VAT. Mr. A indicated that the invoice number wherein the output VAT on the deemed sale was imposed billed Mr. B as follows. The gross selling price is 11,000. The VAT previously paid on deemed sale is 1,200 only. Why? Because he only bought the 500 pieces of the 1,000, which is 50% or 0.5 times the VAT, that is 2,400, the VAT for the 1,000 pieces of merchandise. So it is only the 50%. So he came up with the 1,200 pesos. That total of 11,800. Mr. B can claim only 1,200 pesos input VAT on the goods deemed sold, not the 12,000 pesos times 12 divided by 112. Note that this is not an erroneous billing. So let us proceed now. Let's proceed now to the presumptive input VAT. The presumptive input VAT. Okay. A person or firms engaged in the processing of sardines, mackerel, and milk, and in the manufacturing of refined sugar, cooking oil, and packed noodle-based instant meals shall be allowed a presumptive input tax equivalent by 4% of the gross value in money of their purchases of primary agricultural products which are used in their production. So the term processing shall mean pasteurization, canning, and activities which through physical or chemical process alter the exterior texture or form of inner substance or product in such manner as to prepare it for special use to which it could not have been put in its original form of condition. So the code word of qualified processor is samamiko pare, or sardines, mackerel, milk, cooking oil, packed noodles, and refined sugar. So the presumptive input VAT is a tax incentive to this processor of VAT-exempt raw materials into processed food products. The apparent reason behind the tax incentive is the absence of adequate claimable input VAT for these entities. So we have here an illustration. The Bilimo Oil Corporation, a VAT-registered cooking oil manufacturer, purchased the following materials and supplies in the processing of cooking oils during the month. The copra, which is cost of 1,200,000 pesos. Input VAT, none. I'll explain to you later why it doesn't have an input VAT. because the hexane solvent, the cost is 50,000 pesos and the input VAT is 6,000 pesos. The cans and bottle containers is 200,000 pesos and the input VAT is 24,000 pesos. And so on with the sodium hydroxide carbonate and the activated carbon. The total amount of the cost is 1,600,000 pesos and the input VAT is only 51,600 pesos. And during the month, the limo produced 1,000 cans and 1,500 bottles of cooking oils and sold 800 cans and 1,000 bottles to various wholesalers for 2,800,000 pesos. So the presumptive VAT is computed as the output VAT is the 2,800,000 pesos, which is this 2,800,000 pesos times 12% is the 2,800,000 pesos. This is the 800 cans and 1,200 bottles that has been sold to various wholesalers. That's why it is deducted by, it is multiplied by the 12% VAT. So it is 336,000 pesos less the input VAT. What are those input VAT? Regular input VAT 51,600. The VAT from the solvent, the cans, sodium, the activated carbon. The presumptive input VAT is 48,000 pesos. Why? This is the VAT that is from the copra. This is the VAT of the copra. See, it is multiplied only by 4% because note that there is no actual input VAT on copra, a coconut product, but the law imputes or allow a presumptive input VAT on it as an incentive. So this is just an incentive for the copra because it has no actual input VAT. So it is allowed for the 4% presumptive input VAT. So the total of input VAT is 99,600. The VAT payable is 236,400 pesos. We have the illustration number 2. The Sardinas Corporation processes hot chili flavored sardines. During the month, Sardinas purchased the following ingredients for the processing of canned sardines. The cost of fresh sardines is 800,000. The hot chili is 50,000. The tomatoes is 400,000. The ordinary salt is 20,000. The tin can is 100,000. And the labels is 1,630,000 pesos. The input VAT for the fresh sardines, hot chili, tomatoes, ordinary salt has none because it is subject to the presumptive input VAT. So, as the presumptive input VAT shall be computed from agricultural purchases. Only the agricultural purchases will be computed in this situation or this illustration because the regular input VAT and the tin cans and labels are claimable in the month of purchase, separate from the 18,800 pesos presumptive input VAT, which shall likewise be claimed in the month of purchase. So the hot chili is 50,000, tomatoes is 400,000, and the ordinary salt is 20,000 pesos. Sardines, including mackerel, are marine products, not agricultural products. That's why they are not included here. The presumptive input VAT tax credit shall be construed against the taxpayer.